Us. Okay, guys. It's good to be back again, guys. We're gonna start just coming back to these sessions of the War Room 1985, and this is the London Morning Call. And yeah, it's me again, JR. We're just gonna continue. Larry seems, I think he's a little bit sick, so I'm just gonna take over and start talking a little bit about Gamestop. Usually in the morning, it's just about trading currencies. I talk about cryptocurrencies as well. Look at different areas and the investment vehicles that you may use. But at the end of the day, there are a lot of things out there that we have to pay attention. And one of those will be what is happening with GameStop. How it happened. And there's a lot of stuff that's into what is happening in the U.S. option markets. But at the end of the day, the signs were there, guys. The signs were there, and I'm going to talk to you about Ryan Cohen a little bit, which is actually it's the catalyst for that explosion in price. Because yeah, GameStop is a very old company as it is. I'm just going to put this thing here so we have a little bit of organization, which supposedly I need. Let's also look at the Twitter feed to see how it looks. But yeah, Ryan Cohen, what a great guy, saving the day, saving a little bit of GameStop. Let me see if do I have it? I don't have it. It's there. It's not there. Thank you so much for those of you that are tuning. I thank you guys for your support. And we can look at, does it look? Just give me a second, guys. Let me see if it looks like. I don't know what's going on now. And also there's a delay between what I'm recording now, how it looks on the Twitter feed. I don't think I have it at all. I don't think I have it. No, yes, no, yes. It should be on the screen. Let me just try again with this software. Share. What do I have here? That's the question. It should be on my screen. Okay, let me try one more time. No? Okay, let me see once. Let's check this again and get to know how to use this restream. See, what is what I want to do here? Okay, that's me. And now what are we sharing? Okay, one more time. Supposed to be sharing my screen. Okay, let's see. Here. Okay. So that's both. Okay. No. Okay. One more time. Okay. That's the one. Now let's take a look. Let's say we have it, make it happen again. Ooh, Let me get some coffee. Yeah, like I said, guys, I'm gonna talk. And girls as well, ladies. Is there anyone in the audience? I'm gonna talk about GameStop a little bit. Look at the technicals levels and talk about Ryan Cohen a little bit. For some reason, I cannot make it work. Let's see this one more time. Should be on the screen. So let's see. One more time. Okay, so it's supposed to be looking at me on the screen. Share the screen. Okay. Okay, let's do something again one more time. Okay. It's there. Let's see if it works now, guys. Mm-hmm. I can now have an idea how it works. How can I see both screens? 'Cause that's one thing I wanted to do. Okay. So how do you put both? Okay. Uh-huh. Okay. At the same time. This doesn't work. Right. Okay. How do you have both? Okay. Okay. So now I have both. How that went, how that happened, God knows. All right, perfect. So now what I wanted to share is talk a little bit out of this whole thing today. But so today I'm going to talk, like I said, about GameStop. Just go over exactly a few things that I think that are key, that are important to understand. Um, when you're trading, there are a few things that you can do. You can always look at a stock from the perspective of technicals. You have fundamentals. We all know that. But also there are a few metrics that you can always pay attention to. One of the metrics, so you know, it's the book value, cash value metric. And I think that it's Michael Burry, Michael Burry, the famous guy from The Big Short. He was looking at a company, and I think some people are mistaken because he sold a big chunk of his shares at the end of last year. So now what we have is a combination of factors. One of the key factors is Ryan Cohen from the company Shui. And Ryan, what he did is that he became what we call the insider. He is actually one of those guys that now owns 10% of the company. In order for you to know when someone is buying, and you need a little bit of information, a little bit of analysis. Usually what you do is that you go to EDGAR, which is the SEC, Securities and Exchange Commission of the United States of America. You go to their database, which is EDGAR, again, and you pull one of those Form 4, which is the one I'm going to see if we can share on screen. Still look at it, see if we can have it. Is it there? Is it not there? I don't think so. So let me just try again. I think I have to do this thing again one more time. Okay. Just have to remove it, add it one more time. And Chrome. Okay, this one. It's there. I have it. Let's open it, and okay, there you go. So that's the Form 4 from Ryan Cohen. So basically what happened is sometime back in December last year, a couple weeks ago, almost a month now, December 17, December 18. Let me just, okay, there you go. That's the SEC Form 4. Now, a lot of people that live in the US, they know about this, but they still sort of miss the point of how powerful it is. And one of the things I want to do every morning during the London morning call is to give you a little bit more ideas how powerful is this piece of paper. And it's just a piece of paper, and you may think, well, it doesn't matter, but it does matter because it has a lot of value, a lot of information. Now, sadly, again, I don't have one of those pencils to walk you through this, but I think you can see to the left, you see Ryan's name. So that's the name of the reporting person. Okay. Now, this is a legal document. There's a lot of things on the back supporting and that the validate why this is a very important piece of information in this whole puzzle of understanding why GME actually just burst and exploded in price. Think about this company. This company was just trading last year somewhere around $3, $3.80, $5 in late in at the beginning of August. So we shouldn't be surprised how the media, they don't really have a clue what's happening, and they don't know how to tell the tale, because it's just a process that it took a little bit of time to build up. A lot of people refer to Michael Burry again, but then you have this big chunk of shares, money that Ryan Cohen just piled into stock. We're talking about close to $19 million, guys. That was $19 million. And then you may say, well, okay, he's just another guy that is just buying the stock. But if you look at the dates, of the transaction, okay? It's very important when you see this is the date of the transaction versus the filing. Is two different things. You have the trade date. Let's say he bought it in 17, 18, and then the filing took place 3 days after that. So let's take a look. Let's go back to the charts and have an idea exactly how this happened, because this is something that we need to keep an eye on. So just a little bit tricky for me to how to do this. So take this. I'm gonna bring that chart from Gamestop now. Okay, this one. Okay. All right. Okay, perfect. And now let me just turn it on. There you have the chart. Okay, perfect. So now let's take a look at this, what happened. Let's just go to GameStop. Obviously, I've been working on this one for a while now. Let's take a look at weekly first. So you see, so we have here what we call, you can call easily these in technical analysis, the double bottom, or the stock was at the bottom. That was a historical low for the stock. And let's see, let's go up. Yeah, there you go. So August 19, 2019, the stock went all the way down. It crashed to $3.30. And then again, back, obviously, not obviously, but it's just to understand when you have the whole thing of, you have the whole COVID-19 situation. Let me just share the entire screen. There you go. Let me go back to our chart on the weekly chart. And thanks to COVID-19, sadly, it's a lot of bad things happen. The low is set at $2.83. And then sometime back in July and then August, let me just zoom in this so you can all see it. See this. Okay, right there. July 20, $93. Okay, so what you have at this level, you have the big crash. back in August 2019. Then again, you have a sort of like a retest of that level almost the very next year. And then finally, this low is actually higher from the previous low. So right there, you sort of have you have a technical sign. This is a bullish sign because now you have higher lows. This is what we call higher lows. And based on this factor, you start building up arguments to say, okay, not the best company. They're having a rough time. Physical presence, retailers, they're not doing anymore what they used to, mainly because e-commerce is just booming. There's more comfort from ordering from your home. Gamestop business, as it is, their business model used to be just having CDs or cassettes, and then you go to the store and do exchanges. A lot of that it's gone. Okay, so that business model is gone. However, you still have the brand name, so a lot of people say, well, haven't been there in ages. That's fine, but you still have the name, and there's still a lot of structure that they can use. I mean, when we talk about structure, yes. You look at GameStop as, okay, how are you going to compete with everything is like you have Steam, that's one of the competitors, and then you have the rest of the companies. They're not building any more physical stuff. You only have PS5, you have the hardware, but you no longer have the recurring revenue coming from games. Okay, that's one thing to see. But at the end of the day, these companies, they always, over the time they made money, they have some partnerships that they took advantage of, and that's where you can see the value. Later in 2020, one of the things that's happening is Microsoft did a partnership. Now, I don't know exactly the terms of that partnership, but if you associate your name with Microsoft, we have to look into that, see what kind of value we have. So from the technical view, this low at 374 back in July 2020 was the beginning of a new opportunity for the stock. Now, you move forward, fast forward, you move into August of the same year, sometime on the 10th, that week of August 10th, price already went up to 450, and that's great. Now, from this point is when you start having all those zero hedge articles when they talk about Michael. I don't know, because pretty much can't share my screen. Probably have to do that. Michael, let's take a look at this. Michael Burry, the great hedge fund manager that did amazingly well during the last financial crisis. So if you look at that, it's great. A lot of information from Michael and everything, but that's a little bit too late to the show. The stock keeps going up, and then finally, at some point, here's what I want to take a look at this area, at December 14, that week, which includes the 17, the 18, when Ryan Cohen actually bought the stock. That's where we want to focus our attention, is exactly when bought it, because that is when the big explosion, the excessive, I will say, energy. Think about energy, think about attention. That's when really it comes the big question: what is happening and what's next for the stock? That's what you have to think, and all that comes from the catalyst, the indication that something's about to in the stock comes from the SEC Form 4. I'm just gonna, you know what? Let me just. Okay, so how do I do this? Let me think. Okay, let me remove the screen. Let me try one more time to share my screen, because it's a lot easier for me to talk about everything, the entire screen. Okay, I'm gonna share the entire screen. Okay, that's there. I'm there too. Let's see if I can make it happen this time. Okay, let's see. Let me go back so you can see the Form 4, and let me check let me check the feed on Twitter. We have any changes or anything? And thank you guys. Thank you for all of you guys that tune up, you tune in, and I'm just going into this, learning step by step. I promise you just have to get the habit, the atomic habit of doing it every day. So I have, okay, I think, oh, wow, finally. Wow. Oos. Finally got it. I think, yeah, I think it's going to work now. It's going to work. Now, doesn't look like, all right, it's working, it's not working. Okay, fine. I think I have my screen now. Just going to play around, look at what we have here. But yeah, it's absolutely something that I have to do more and more, and then it will get the show will get better, and you guys will get the best of this entertainment education for you to have an edge in the stock market and any markets that we study. All right. So again, it all comes back to this SEC form. Remember, there's legal value in this, so we definitely know Ryan Cohen started loading the boat on the 17, the 18 again. He did close to $19 million of the stock. Now, let me go back to Trading View. Let's go to the daily chart and take a look at exactly the step-by-step of the beginning of a new era for this stock. Call it short squeeze, call it Wall Street bets at Reddit. It doesn't matter. The real catalyst of this big move, it comes from Ryan Cohen, SEC Form 4. Now, some point here on the 14, I want you to take a look at this. See this, okay? Take a look. December 1st, 15, 16. Okay, now this is the 17 when he started loading. And he loaded then again on the 18. And then we have that big boom on the 22. That's 25% in a day. 25.30. That's just a few decimal points, decimal percentages. But this big green bar, look at that previously. The other time was back in October, 44%. This is, I presume this is when we're talking about Michael Burry and everything. But this is the big change. After that, the stock, it does what it does after a big rush in prices. Stocks, the vast majority of the time, what you're going to do is just going to consolidate and retrace a little bit. 90% of retail traders, 90%, guys, we are going to buy on the pullback. Now, one simple tool that you can use to measure that pullback, okay? To measure that pullback, you can use Fibonacci. Now, because we're studying this range, okay? This is the range we're studying from $12 all the way to the top, $22.40. You take the Fibonacci from the low that you know, the range, and you go all the way to the top, okay? And then, look at this. It retraced all the way back to the 50%. Now, the 50% Fibonacci, that's not a level. That's just part of the Fibonacci retracement levels, but this is not really a level that a lot of people study. If you have any question, comments, please let me know. In Europe, they don't use the 50. Now, it bounced back from the 50, but the key levels in Europe, at least, are the 38.2% and the 61. Now, in the US, we use a lot, I think we use a lot the 78.6. That's a key level. That's like, okay, it's retracing and this is the end. You really can't move lower than this, because if you move, if you break down 78%, that is like, okay, this is over. There's nothing here. It's just whatever. So you take this and it went retrace, giving us a good opportunity, and then it flew, it exploded. Now, there's a lot of videos on YouTube where you can look at the whole explanation about the gamma squeeze. Gamma is the measure how delta, which is part of the options structure, that indicate the expectation, how much money or how much will move the premium for XYZ percentage, and we can go deep into that. But the purpose of this session today, in this London morning call number 6, is to see that there were a little bit of opportunities, a little bit of signs that the stock gave us from the technical perspective, also with the value of the Form 4. And that's actually when you want to pay attention to the stock. Anytime you see one of these insiders, being those that are in the company. Now, Ryan Cohen, how is Ryan in the company? Ryan is in the company because now he owns 10% of Gamestop. Now, I want you to think this. Do you really think Ryan Cohen bought $19 million just because he thinks GameStop is a bad deal? Now, we can argue all day about it, but definitely when you see such a big chunk of money allocated in one of these companies, they're looking for something. They're looking to make money. Now, we cannot deny that investments, they can always go sour. Things can happen. There are external variables that we cannot control. But at the end of the day, you actually are buying. Statistically speaking, you're buying because you want to make a profit, right? So this was the catalyst. This actually happened a month ago. So that's my view on GameStop. Now the $1 million question, is it going to continue? How far is this short squeeze going to take GameStop? Is it going to stop? What are we expecting? Now, let me show you what I think may happen with GameStop. And again, people may say, oh, it's a bit too late. Wait, hey, look. There's a lot of guys on Twitter, Ripster, for example, and the boys from Atos Crew, and a lot of other friends, people that we know and friends that I have, like the Lion on the Lamp, Holder, and the rest of the guys. Look, you can buy higher and sell higher, okay? So that's the reality. Now, if I go to the monthly chart, and one thing I want to show you is how we broke this level back all the way back to November 2007. This is a key level. This is $60 per share. Now, you may think, oh, this is over. This is it. Well, listen, in today's market with so much liquidity and the discovery of how to trade options, and we'll talk more about this an article that Lily, non-Lily, I think she's on Twitter. She basically said something, and something that I like a lot. This is the article. It's a Medium. She did a great job explaining. She did actually part 1 and part 2 explaining. Nope, it's Lily. 11-minute read. And she did a great job explaining GameStop. And she talks about the power to the market players, part 1 and part 2. And in part 2, there's a section that I like to share with you, because I think it's critical, and it's going to define this new decade, 2020 to 2030, and it's important for everyone to understand this. She said something that I like. I don't know now if it's part 1. Actually, she says something that caught my attention. Now that's okay, perfect. It's right there. Take a look. This is the last 2 sentences that she wrote, and of course, I invite everyone to read it. She's a great writer, by the way. But here's what is going to define this new decade. Again, 2020, 2030. The moral of the story here is retail, for better or for worse, finally learned how to weaponize options. We'll see what happens next. Nope, it's Lily. She's a Medium. I totally encourage you guys to look for this article, because it explains in detail, very professionally, it's written in a way that you enjoy it. Although it has a lot of technical vocabulary, you will totally enjoy it. And she ends in a spectacular fashion saying, believe it or not, retail, for the first time, I will say like in 4 decades, we do have the upper hand. We do have it. And it's something to be proud of, something to consider, because this is not over by no means. Now, I'm going to share with you something that there's a few quant guys that they laughed when they don't like this technical analysis. And more than technical analysis, I just like to sort of create a map to have something to work with. And this is what I call the breakout levels. Nothing fancy, nothing that you haven't heard before. It's just breakouts. Now, basically what I'm looking is the previous high. The previous high goes all the way to November of 2007. Now, remember, we have Ryan Cohen. He already made some changes on the board. He joined the board with a couple of his friends or close allies. Everyone is buying options like crazy. Market makers don't know what to do. So now, as soon as we have the price of the stock trading above this key level, which goes all the way back, this is a multi-year level, $60 per share, or well, in this case, 65, something here. It's actually 60.50. So it got to be somewhere around that. As soon as you have the price of the stock trading above of the price of the asset, because you can apply this to any other asset class. As soon as you have the price trading above that level, it's game on. So then you just need a little bit of guidance. So this is the low, the latest big low, and you project that all the way back. You have $61. Okay. Just going to expand this a little bit. Let me see if I can do that. Move it there. And from this point, sort of, you have this idea. Okay. And then if the price is actually staying above, then you're going to expand another $61. And whether you like it or not, if they keep going this way, don't be surprised to see GameStop trading in 2021 at $126. That's right. $126. That's and this is a conservative. This can actually go really crazy. But in 2021, thanks to retail traders discovering the power of options against the evil market makers for the first time, make no mistake, we have the upper hand. And the story, the comeback story of GameStop, is not over yet. Now, there's a lot of what happened with the Citroen research guy. I think it was Andrew. I think it's Andrew. He came out. Look, you can always have an argument to do something different. You can come and say, I'm going to short the stock. This thing is going to $20, which was not also a very impressive target, because usually when short sellers, they are looking to destroy a company because the merits of the company be lame, the company itself being a mess. $20 is not something that you will say, okay, trading at 50, was trading at 50 when they came up with the video. And that's great. But the reality that if you say $20, is the company that bad? Is it just losing 50% of what they have? Usually, if you call some short sellers, they're looking for the company to take all the company way down under $5. So the whole research, they do have points. I'm not going to say that Andrew doesn't have points that are valid when it comes to understand how to short this company from this point. But what you have to understand at the end of the day, let me just bring myself back so you can also see me when I explain this. Oh, Jesus, man, what I have to do to learn how to use this thing. Kudos to the guys at Restream. I love this. It's really helping me. I'm on my own, but it does help me. Let me see. There you go. And no. Okay, perfect. So like I said, I mean, Andrew from Citroen Research, these short sellers, they have all these ideas, arguments. They're valid. The company's actually in the process of shutting down, closing down stores that are not performing. And this is not a different strategy that a lot of companies are doing. Think about, for example, something sort of similar is, I think it was Pinterest. They closed that. They had a contract for big new HQs in, I think it was San Francisco. Correct me if I'm wrong. But the moral of the story is basically they said, okay, we're going to pay you $134 million. We're going to pay you millions of dollars to get out of a contract so we don't build the new HQ for Pinterest. And that was great. So the bottom line is that a lot of companies, they're just rethinking their strategy when it comes to have physical space. Don't you love that? I mean, if you're the owner of the company, it's like, oh, Jesus, I'm paying $150 million something just to get out of the contract. But in fact, you're saving $300 or $250 million, this big box that you can just move into research and development and a lot of things that you can do for your own company. Now, the same process is GameStop going through. It's like, look, we survived. There's a new opportunity. We may thrive again, but we have to wake up. We have to shut down those stores. We have to come up with a new experience. It's the same case of AMC, which I will discuss tomorrow during the London opening. And AMC theaters in the US, they have to come up with better service. They have to rethink what they're going to stream. You have to give people experiences. That's the success of companies like Peloton Interactive, ticker symbol PTON. They closed the deal with Beyoncé, partnership with artists. And the idea is that it's not just the bike. It's just not the American status quo. It's the whole idea of, hey, there's the whole biking at home is I keep training. I can connect with my friends. It's the experience. So GameStop path to success from this point will be experiences. Can they partner with other big players? Can they partner with Fortnite? Can they do something? Um, it's about finding it, because right now, as far as what it is, the stock price is good. The stock price is okay for whatever reason. Gamma squeeze, SEC form from Ryan Cohen, the guy from Chewy. It doesn't matter. There are a lot of factors that are playing their favor now. They have to figure it out as far as the business model and what to do so they can keep it up. That's the name of the game now, is keep it up. Because remember, at the end of the day, the price of the stock is just a little bit of, speculation. You speculate with the price. But at the end of the day, markets are just a mechanism of the future today. And as long as that is true, which tends to be true for a lot of companies, then GameStop has a chance to survive. So 126, still, that's very conservative, so you know. And you may sound like, wow, 126. Yeah, well, it's not much. Things can change drastically in the age of e-commerce and digital. So that's what I have for you guys today. I thank you guys for your support. I'm not going to extend it today. I have coaching in the next couple hours. I'm going to take a break. And this is going to be the London Morning Call. Tomorrow we'll come back and also talk a bit more about what's happening with Bitcoin. I know there's a lot of you guys that trade Bitcoin. I think cryptocurrencies, as they become more available, for example, the case of PayPal offering to their clients access to purchase cryptocurrencies. I think Bitcoin, Ethereum could be the other one. It's a good thing that you can have to expand. I'm not a fan to say, oh, I think Bitcoin is the future. I think blockchain, which is the back end of Bitcoin, is what it is. But tomorrow I'm going to talk more. What is this? Okay. I'm going to talk more about trading actively. Ethereum, Bitcoin, also Ripple. Ripple has a lot of challenges right now because the SEC came after them. And it seems that they have a little bit to explain, a little bit of to correct in their business. But once they do that, always think about Luckin Coffee. Yeah, that Chinese company that's supposed to take down Starbucks. Well, they tried. I give them that, but it supposedly was a fraud. Then the company went to the penny stocks levels. They settled with the SEC. I think it was $120, $130 million. And then that thing popped 100%. So can be the case for Ripple? Well, sure. Why not? It's just having an idea of how things went down with other companies, how they may affect. Now, Ripple, as well, at the same time, it previously was trading at, I think, about $1. Let's take a look at this thing before we go. It was trading, actually had a high. It has a lot of liquidity in this level. I want to share this because take a look at this. This is huge liquidity that this thing has. I mean, this is not over yet by no means. And if you're looking to speculate a little bit more, well, chances are you have a lot to squeeze out of. Squeeze, there's a new word in 2021. Squeeze from Ripple, $1.90 all the way to the top. The extension is $3.22. It's only trading now for 27 cents. Now, the narrative here is don't look to buy. Don't look to buy because it's 27 cents. Look to buy for the potential technology, the power of its technology. And if things go well and they settle and they correct the business and investors agree with the story that they come up with, well, finally, there can be some pop all the way back to these levels. There's something absolutely that first, there's no doubt we have to clear the high at 78 cents. But the story is there. I wouldn't be surprised in the next 2 years, it just trades back above 70 cents all the way back to $1. But definitely we have to look into these opportunities. Doesn't matter what you're looking to trade. Look, not everyone find themselves trading the same assets. It doesn't work. Some people like to trade Forex. Some people like to trade US stocks. Some people like to trade. Some people like to talk. Some people like to laugh at others. At the end of the day, it's just to take action. Absolutely, I think there's an opportunity in the markets today. And if you manage your risk, if you understand how to manage your risk, the opportunities are endless. I thank you so much. This is JR for the War Room 1985. This is the London Open number 6. I see you guys tomorrow. Like I said, I promise you guys, I come back every day and I will learn how to use the tools better. and this entertainment and education show will improve step by step. Thank you so much, guys, and until the next session, that it's tomorrow. Us.